the U.S. has just wrapped up their election. It looks like we will have a new administration, and initially the grain markets were selling off, but we've shown some strength here towards the middle in the afternoon session. So that is part of the story as what's going to unfold this week. We do have a USDA report out as well on Friday. And we just kind of wanted to reset the table here as far as what our biases are on the major row crops, corn, beans, and wheat. We're going to look at the U.S. ending stocks, world ending stocks, and just kind of tell you where we're leaning on those as we head into this USDA report. But keep in mind, everything we're discussing is for education and example purposes. Make sure you guys know and understand your risk tolerance as we go through the information. Here's your monthly corn chart with U.S. ending stocks down at the bottom. We continue to hold near that 2.0 billion bushel carryout level. It's really just kind of a toss-up. It's not low enough to be aggressive for the bulls, and it's really not high enough to be aggressive for the bears. Our initial and continued bias in here is that we kind of trade that 350 to 450 range. When we look at the world stocks, it's the same thing. We've come off of the highs, but we aren't breaking lower anymore either. And you'll see something like the wheat chart here in a little bit. But world corn stocks have kind of flatlined. So our bias here on corn right now is really neutral. And when we get the USDA report, we don't see much of a change in this overall. You know, historically, we need to carry out in the U.S. to be under 1.5 billion bushels if we want to get up into that $5 level. And right now, we just aren't there. So again, our bias is neutral. There just isn't enough to really give the bulls or the bears much feed. We're probably looking between 350 and 450 in here. Maybe you could argue 375 to 475, you know, depending on what kind of weather we get for South America and then into the U.S. season. So make sure that you guys know your numbers on corn. Consider the upper end of the range to be making some sales as we head through the winter months. Here's your monthly soybean chart. Again, U.S. ending stocks down at the bottom. 550 is an extremely healthy number in here. We're projecting a range probably 9 to 11 right now. But we do lean, you know, a little bit more negative on the bean side of things. And this is why when you look at the world soybean ending stock number, this chart has just continued to climb higher. So again, our bias on beans is a little bit more to the bearish side of things. You know, 11 might be a pretty high watermark to reach without significant weather issues. You know, when you're talking $12, $13 beans, you really need the U.S. Below 300 million bushel. Like you said, we're sitting at 550 from that October report, and world carryout is still projected to be a record high. So beans, I think we're going to have to be a little bit more aggressive with here on sales. $9 seems like a reasonable downside. We could peak below that as well, depending on how South America season goes. So again, when it comes to the beans, we really want to keep the market ahead of us, make sure that we sell into these rallies. And again, 11 might be just a little bit too high as we go through the season. Here's your Chicago wheat chart with, again, the U.S. ending stocks down at the bottom, 812, kind of a mid number. Similar to corn, it's not that bullish, but it's not that bearish. Where wheat's going to get a little more support, though, so when you look at the world ending stocks number, this continues to trend down, and this is why we have a slightly bullish bias on wheat. Unfortunately, like we said, the U.S. ending number is going to keep a lid on prices a little bit, but any type of global conflict or global concerns, that's where this market could really break out. Nonetheless, we have to assume somewhat normal conditions. So, you know, we want to trust that 550 support level, but at the same time, when you Chicago and KC, especially on those July contracts, get above 6 into the 620, 650, we think that's a good value. Historically, that's been a good value to protect, and the world wheat market will plant some more wheat if prices are up there. And as you can see with the decline, we're looking for an incentive to get these wheat stocks back higher. So anything above 6 will likely encourage global acreage. So putting everything together, really it comes down to our most negative market right now is probably the bean side of things. We'll probably be a little bit more aggressive on bean sales. When it comes to corn and wheat, you could work at maybe a little bit of a slower pace. Remember, your whole farm is a diversification strategy. So if you're more aggressive on beans, you can give corn and wheat a little bit more room. Always keep the numbers in front of you. I think regardless of what the bias is in here, stocks across the board are pretty healthy. So it's going to be a little bit tighter for marketing. So make sure that you know your numbers. If you're looking at profitable sales, you should probably take it. Remember, our philosophy here is that if the market goes higher, that's a good problem. We can work with that. What we can't do is forego profitable sales and then have the market go lower be forced to make a decision. Oftentimes, we don't have an answer at that point. So we got to be ready, know your numbers, make sure that you're rewarding these rallies. Have a goal for how many of your insured bushels you want to have sold before July. We're carrying good crop insurance, and as we get into setting that stuff, you're going to want to have a goal of how much of the insured bushels seasonally it's good to sell into that June, July timeframe here through the winter. And then lastly, if you're looking to try something different, give yourself a little bit more opportunity or more flexibility, start to familiarize yourself with some board strategies, especially through the winter months. We have videos, call your broker, call your advisor, talk to them about how puts work, how fences work. That might be something that's worthwhile for your operation this year. So as always, guys, we appreciate you tuning in. Make sure you hit the like button, hit the subscribe button. If you have questions or need help with a marketing plan, we offer that as well. So feel free to give us a call. And as always, we appreciate you tuning in. We certainly enjoy making the content for you.